Welcome to the Catalyst Effect podcast. We're doing a special series of The Voice of the Founder in conjunction with Lions Den DFW. Lions Den DFW is having their pitch competition and entrepreneurship event at Dallas Baptist University on April 29th and 30th. Love to see you all down there. We have been working with Lions Den for the last few weeks, and we have the opportunity to interview every one of the founders that submitted for the pitch competition, and we've met some really amazing voices and really awesome businesses. One of the most interesting businesses that we've seen has been in the real estate, fractional real estate investing space. Andrew, the CEO, I believe you're the CEO, is on with us today. Andrew, thanks so much for being here.
Isaac, thank you so much for having me.
Andrew, I had the opportunity to see your due diligence and watch your pitch video. You're building something really intriguing. After we talked last, my wife and I sat down and said, how do we get my daughter, 17-year-old daughter, start investing this way now? I mean, these gains, if this runs 30 years, it'd be just amazing for her. So I was inspired by what you were doing, and I'd love to let the audience know a little bit. You have a very specific customer segment that you're reaching, and you're solving a very sensitive and important problem for them. So could you tell me a little bit about your customer?
Absolutely. As I think of my customer, I tend to think of myself. 20 years ago, I read a book called Rich Dad, Poor Dad, and I said, wow, that sounds amazing. This concept of investing in real estate, entrepreneurship, and yet I had no money. I came from very humble beginnings, paid my own way through college, and so I graduated from college $50,000 in debt. How am I going to buy real estate? It just seemed like a pipe dream. And so as I looked at the market, I just couldn't find an easy way in. And so that's the exact customer that we serve, the person that wants to get into real estate, doesn't have $50,000 to put as a down payment on a single unit or a duplex, but has some excess liquidity to get started.
And you're not talking about a lot. You're talking about $1,000, right?
Yep, exactly. Yeah, we ran a pilot. We raised a little over $200,000 from about 178 investors, and so $1,100 average check size. That was with a $500 minimum.
Wow. So tell me a little bit more, because you go from being a broke college student with Rich Dad, Poor Dad, and I think that's actually in your pitch deck, and now you're running multi-million-dollar portfolio of properties. How do you go from there to here?
Yeah, by the grace of God is really the answer, which I'm sure will resonate with your audience. From a super practical perspective, I actually bought a duplex before the crash of 08 and 09 with no cash, no credit, no experience. I actually walked away from closing with a check for 20 grand. And I took that check and bought another property and then refinanced that and bought another property. Next thing I knew, I had 20 units. We raised our first fund. My goal was to raise $10 million. We raised 17. And since then, we've raised $200 million from 300 net worth, ultra high net worth investors, and bought 3,600 units of real estate with it. And so we've got a little over 100 employees. We manage the real estate and we raise capital. And that's kind of what we do today.
So I have some family members that had the idea, oh my gosh, we're going to become property millionaires and we're going to do it with other people's money. And they went out and bought multiple properties at the same time, all to flip. And they started flipping properties, looked like they were going to make some money. And then the fire came. Literally, they were doing the work themselves. Fire came, burned house to the ground, and then that set them back on all of the payments on all their properties. And then they moved into a trailer that they were able to scrape some money up with their 5 kids, trying to figure out how to get a house again, because they over-leveraged, they made some really bad decisions, and led from looks like we're going to be wealthy to homelessness, literally. Fortunately, They were able to work their way out of that. But I'm sure you've heard some horror stories, too, of the starry-eyed college grad with $50,000 in debt and Rich Dad, Poor Dad going out to become a real estate millionaire. How do you help people avoid those pitfalls?
Yeah, I think that is an exact example of where things can go wrong. And I believe that the solution to that particular situation is 2 things. 1, diversification, and 2, professional operations. Yep. And so from our standpoint, any fund that we do will have 25 assets. And out of 20 to 25 assets, you're going to have some stinkers. We're going to have a dog that is a negative IRR and a bleed on cash. And we underwrote it. We did everything we could in due diligence, and it's just a stinker. And then in a portfolio of 20 to 25 properties, we're going to have some 35, 40% IRRs. Like they're just home runs. Everybody is underwater who bought real estate in 2022, yet we bought a property for $6 million in 2022 and sold it last year for 12 million. So we 2x'd the sale price and actually x'd the equity.
And that was a combination of strategic buying, strategic improvement, and then strategic exit, right?
Exactly. And that gets into that operations side of things. I mean, just because you were a good doctor or a lawyer or attorney does not mean you're going to be a good property manager.
No, just because you're a good data scientist doesn't mean that you're going to be a good CEO/podcast host. I've learned that the hard way.
Right. Well, you're doing great. You're doing something right. Exactly. I mean, so you get all these people that did well in their profession and want to invest in real estate, but they just don't understand how to actually drive net operating income and value. And so that's where we come in. We put together a pool of assets instead of a single one, and we do professional property management as opposed to somebody needing to manage it themselves.
All right. So my daughter got a $1,000 check for her 18th birthday, and she's like, I'm going to invest in real estate. What is that? I mean, I don't know anywhere else where she could actually do that. What does that look like for her? And then she's obviously not going to touch this. So any returns go back in and hopefully grow. And I believe you have a pretty good rate of returns. Let's say my daughter puts in her birthday money for a few years and then just lets it grow with you all. What are her possibilities there?
Yeah, it's a great question. So let me tell you, if this product didn't exist, what I view as sort of the problem, people can go one of two places, either the public markets or the private markets. In the public markets, there's REITs. Now that's technically investing in real estate, but it's investing in basically a black box. You have no visibility. They're usually investing in commercial real estate. It's oftentimes in the big boom markets that often have a big bust as well. And so there's just not a very strong niche. Or you can go into the private markets. Of course, in the private markets, you typically need, $50K or even $250K minimum. Our fifth fund is actually $1 million minimum. And then you lack liquidity. It's usually a 5-year lockup, 7-year lockup, something like that. And so what we've created is a product that fixes all of those. Unaccredited investors, so everyday investors can invest for as little as $500 or $1,000. And they can do it in less than 3 minutes, go through all the compliance, connect their bank account, and they're invested in a pool of assets that they can see. So they can actually go online, see the assets, see the returns, touch them and feel them. They could drive past them if they want, if they're in the area. And then we generate liquidity two ways, either redemptions directly from us or through tokenization on the blockchain. Yep. And so we think the combination of those just does not exist today. And so for her, our historic returns have been 21% IRR over the past 10 plus years of all exited assets. Now we're not promising that in the future, but I think teens, mid-teens is feel pretty confident about that. And so,
I was at an investment conference, and this guy got up and talked about how he was investing in West Texas oil wells, and how he was taking wealthy people's money and investing and getting 12% year over year for 20 years. And now he was going to be able to open that up to a small investor, meaning under $100,000 in investment, and offer them maybe 10 to 12% of return. And there were 30 people standing in line waiting to talk to that guy. Like, he was able to tell, hey, nope, don't want your money. I'm going to take these 30 people's money instead, because he was able to not promise, but indicate a 10 to 12% yield. And he was up there saying, hey, multimillionaires, they're not greedy. They're not looking for 17%. They're looking for 10% every single year, which is great when you've got $100 million and you can add $10 million to it every year. But when you're my mom with a $40,000 pension buyout from her late husband, getting a better return means something. But I mean, you're talking about a really meaningful, if I hadn't seen your track record and know what you guys are actually doing, I would think, stars in his eyes, another visionary founder with big ideas. But you're actually, this is like Dave Ramsey says, in the stock market you can get 16% maybe or over a 20-year period, and you're here saying, hey, over a 20-year period we're scoring over 20%. That's notable. That's really exceptional. And then I'd like to take a little step back because you kind of glazed over the tokenization. Municipalities around the world are legislating right now. I've talked to people in Zimbabwe, in Switzerland, in East Texas, that are writing legislation to tie tokenization of assets to the title, meaning that when you have a token, that is a representation. It's just like the title that's sitting in somebody's safe somewhere, or the copy of it in somebody's email address, but that token is becoming a real asset. And so you guys are building something that's very modern, but also embracing the future and creating even more security around that asset by building that token, right? And then you're storing in the blockchain. It's not just a line in a database somewhere. It's very publicly, very transparent out there, registered to the investor. What was that process like for you to go through that route of the tokenization and then integrating that into your application?
Yeah, I'll tell you what, I have been interested in blockchain technology and crypto as a adjacent technology and asset class for a very long time. And it just does fascinate me that the technology now exists where you can capture ownership in a token instead of, for years and years and years, it was a piece of paper. Mm-hmm. And so to your point, it's transparent, it's immutable. It's something that is much more solid than a piece of paper that can be forged or, whatever. Yeah. And the fact that real estate is still deeds, I mean, literally we sold a property yesterday and bought a property yesterday, and I'm signing papers and I'm still signing, 40, 50 signatures. And I'm just like, this has got to change. And so, yeah, in our business, it's called a transfer agent that handles a capital account, which is basically the stock for an investment in a fund. And so we capture that on the Ethereum blockchain as opposed to a piece of paper.
Yep. Yeah. Immutable literally means that once it's written, it can't be changed. The only thing that you can do is write another record that references it and updates the state of it. I know you know that, Andrew, but some of the folks that are listening may not. I own some property in Chattanooga, Tennessee, and I about twice a week get a mailer or a call or email from somebody saying, hey, sign this this purchase contract. And when I'm like, hey, yeah, I'm interested. The numbers look good. Let me talk to the agent or the broker. Crickets, disappears, because what they're able to do is they're able to take the signature, forge it over onto a sale agreement, and then go down to the county and re-register the property in their name before I even know anything's happening. And that happens a lot. We hear of people own a lot and then they come to check on it and there's $1 million house on it, and somebody outside of the United States has sold it and received the funds. But putting that in the blockchain creates immediate notifications, immediate traceability, and there is no way for somebody to go in and just take your asset and sell it to somebody else. The visibility is just too clear. So I like that a lot. So your solution is, I think it's timely. I think it's really important. I like it a lot. I have some ideas of how I'd like to see. I know you focus. Now, you're not, if I give you $1,000, I'm not going to own 1/millionth of a percent of a New York City high rise. So you have a very specific market that you target, that you operate well, and that's one of the reasons why you've got such a long track record. Tell us about that.
Absolutely. We call it the forgotten middle, and It's basically the middle across 3 domains. First, it's middle geographically, so middle America. We intentionally stay away from the coastal cities where there's just been a lot of capital. Mm-hmm. I like to tell people in our markets, we don't get the hangover because we weren't at the party. It's like... If you look at those other coastal markets, they go up, but then they crash down. We're just slow and steady up and to the right. That's definitely part of our thesis. Then it's middle demographically, and this really connects to our mission. So we serve a resident base that is often somewhere on the spectrum of neglected to actively preyed upon.
Yeah.
Oftentimes, there's a lot of capital that goes to Class A, right? New construction, development. There's a lot of capital that actually goes to Class C, subsidized housing because of tax credits.
Section A, guaranteed subsidies,
CRA credits that banks get, all that stuff. But there's just that middle is totally forgotten. There's not a lot of capital, and these residents are often, frankly, being served by slumlords, and they're generational owners that just actively neglect the property.
Or 800 numbers on a board by some overseas corporation that has no interest in serving and improving their lifestyle.
Exactly. So middle geographically, middle demographically, and then basically middle economically. We buy we buy properties that are above kind of the mom and pop investors, but below the institutional investors, like the example you just gave. And so a lot of times you get, every doctor, lawyer, or whatever wants to buy a 20 unit, 30 unit, 40 unit property. Above, say, 200, 300 units, you get tons of institutional capital. But again, in the 100 to 200 unit space, that's really our sweet spot. And so if you take middle, we are really the only player that does that and does it in a professional kind of a way. And to your point, that's how we've been able to generate alpha and really have strong returns.
Yeah, and you're not trying to buy a distressed property and put $1 million into it with the hope of taking a penny stock and turning it into a Tesla. You're out there buying conservatively properties that you can improve, but are standalone, habitable, and operational right now. And they don't just have property value, but they also have business value, because you could look at the current rent rates and occupancy rates and all of those things, doing analysis.
Exactly. You got it. So we don't buy an asset unless it's 90% plus occupied. When we buy it, typically we're buying for around 70K a unit, putting 10K a unit in, and it's worth 100, 110, 120K a unit. Rental rates are, literally we bought properties where the rental rate going in was $500 a month on average. So just way below market. And, we'll boost rents a little bit as we own the asset. And oftentimes those residents are more than happy to pay, the little bit of increased rent to get the service and the quality of housing that we provide. And
the improvement. If you're putting $10,000 into a unit to improve the value and the living experience for that tenant, then it's worth a little bit more of an investment. I don't know anywhere in Texas you can rent a unit for $500. I think that an improved unit for $575 or whatever it is that you do probably makes a lot of sense, especially today. All right, so we've talked a lot about what you do, what the value you bring, what your investment thesis is. How do you use this on mission? How do you glorify God and expand his kingdom with what you're doing?
My favorite question. Well, it starts with our mission as a company, which is improving lives through real estate. So everything we do we think of as being the hands and feet of Christ to our residents. So the 3,600 people that we serve, many of them would never step foot in a church. By the way, I've served, I'm on my 4th term as an elder in my home church. So this is not to discredit the church at all, but the church is not reaching these people. And so, but we're their landlord. And so we have an opportunity to serve them and, to show them what love actually looks like, to love our neighbor well. And oh, by the way, we believe just by loving your neighbor well, that actually does produce good returns, but that's not why we do it. We get to actually serve them and in many ways have actually shared the gospel with them. So that's one. We also think about our various stakeholders. So, certainly we are a steward of capital, investor capital, and many of those folks we've gotten to have conversations with, faith-based conversations with. And then really on the employees side, it's also a great opportunity. Again, we have over 100 employees, many of which wouldn't go to church, but they'll come to our office for 8 hours a day. And I've had the privilege of not only sharing the gospel, but actually baptizing one of our employees, which is just such a privilege. And so it's really just being Jesus to an overlooked demographic is really how I think of our kingdom impact. Now, above and beyond that, that's the faith side of things. We are also just an impact investing firm. And so we produce an impact report every year. We have social impact, we have environmental impact, and we obviously have financial impact just because of the way that we serve our markets. And so we generate impact in a generic way, but also have spiritual impact in a very specific way.
Yeah, I love it. For years, I was afraid to do business with Christian founders because they would have big claims and they would say, God called me to do this, even though they would have no skill, no capabilities or training or education in that space. And then they wouldn't pay their invoices and would expect me to forgive them for it. I have scripture verses to back that up, and then I'm trying to pay my staff. that was experience that I had, and I'm on a rediscovery journey, coming back to refocusing my heart, life, and business on Christ. So it's been really refreshing to find people who believe that they're called to a specific market or segment, trained for years under God's guidance to become excellent at that, and then stand and say, I provide services three ways. We do good three times, both to our investors, to our employees, and to our tenants, and then actually live through that. So it's been a really exciting, and thank you so much for sharing your story, Andrew. Let's say that any of our viewers want to reach you. How would they find you and find out more about both the investment opportunity in your company, but in the portfolios?
If you want to reach me, I'm pretty active on LinkedIn. Easiest thing to get a hold of me is send me a message on LinkedIn, Andrew Reichert, Reichert. If you want to hear more about Return, the product that we're building, it's reiturn.com. And our primary operating company is called Birgo Capital, BIRGO Capital.com.
You know, I have a knack of naming companies that I have to spell every time too. We're a lot alike there. So awesome, Andrew. Thanks so much. This has been another episode of The Catalyst Effect in the series of The Voice of the Founder. Really exciting stories that we've been hearing in our association with Lions End DFW. I look forward to seeing everybody there on April 29th and 30th at Dallas Baptist University.
Thanks, Isaac.